Hello everybody, this is Lara with your weekly video for oil for the week ending Friday, 23rd of September 2022. I have tried to find a more immediate bearish wave count. I have one, but it's not very bearish. It's allowing for a little bit more downward movement, but it won't expect too much. There is a bear market underway, but I'm still expecting a large bounce or consolidation to begin sooner rather than later. I'm going to judge the main and the alternate Elliott wave counts this week to have a close to even probability. So although they're named main and alternate, close to a 50-50 probability. Elliott wave analysis first, classic analysis last. And on the weekly chart, I'm going to adjust the labeling of cycle wave 1 slightly. I'm going to see primary 1, 2, 3 and 4 over here, and within primary 5, intermediate 1, 2, 3, 4, 5. Intermediate 4 is brief and shallow. I'm a little bit happier with this labeling. I'm allowing for intermediate 4 to be more brief and shallow than intermediate 2 due to a strong upward pull from intermediate 5 forcing the fourth wave to be brief and shallow. So it's now in a more normal kind of context, so I'm a little bit more comfortable with this labeling. If cycle 1 is over there, then cycle 2 should be expected to last 1 to several years. I don't want to label primary A over here, that would be too brief, and so primary A may be continuing further as a 5-wave impulse with intermediate 1 and 2 complete and intermediate 3 continuing lower. At the monthly chart level, it is showing some increase in downward momentum beyond intermediate 1. Weekly chart level. I will expect in the first instance cycle wave 2 to find strong support at the upper edge of this channel. This channel is copied over from the monthly chart. Elliott wave is fractal, so if you haven't viewed the monthly charts, please do so. I link back to charts, text and video at the start of every analysis for you every week. Cycle 2 may not move beyond the start of 1 below 10.24. At the daily chart level, here's the end of intermediate 2. Let's just go back. So we're looking at this high here, intermediate 2, within primary A is this high here. Within intermediate 3, minor 1 may be complete. The main wave count will still expect minor 2 to continue as an expanded flat correction, subdividing 3, 3, 5, with minute B now a 1.64 length of minute A. This is now longer than the common length of up to 1.38, but comfortably still within an allowable guideline of up to 2. There's no rule, though, stating a maximum limit for a B wave within a flat, and flat corrections are common structures. The target is recalculated at 109.18. Minor 2 would reach 1.618. The length of minor 1, and at 109.30, minute C would reach 2.618, the length of minute A. So a small target zone for a strong bounce to begin here or really soon. It's possible minute B could still move a little bit lower before the bounce begins, and if it does, then the target range would need to be recalculated. It would probably just widen a little bit. The lower edge, 109.18, would remain the same. Minor 2 may not move beyond the start of 1 above 123.68. At the weekly chart level, this is all the same to this point here, but what if cycle 2 is unfolding as a flat with a double zigzag for primary wave A? W and X are complete, this high labelled X. This point up here, Y, unfolding lower as a zigzag with minor A, B and minor C an ending contracting diagonal with 1, 2 and 3 complete. Now a little bounce for 4, maybe to end at resistance at this channel here. So draw this trend line from this high to these highs and look out for resistance for a bounce if it unfolds early next week, and then a final fifth wave to move below the end of 3. If that happens, that would complete a zigzag for intermediate Y, which would complete a double zigzag for primary A. When A waves subdivide as corrective structures and a double zigzag is a corrective structure, that indicates the structure 1 degree higher is a flat correction. So when A subdivides as a 3, B must also be a corrective structure and must retrace a minimum 90% the length of A. When we know A has ended, we can calculate that minimum requirement for a flat, and we can also calculate the common range for B of 1 to 1.38 times the length of A. When B is complete and C begins, we can use Fibonacci ratios between A and C to calculate a target for C. I can't do that yet. Okay, classic analysis now. And every now and then, after a member's request or comment, I might publish another chart for you in comments each week. I did one last week. It was more bearish, but I just don't have enough confidence in it to put it in the main analysis. But do have a look at last week's comments and have a look at that chart. It has a really low probability, too low for me to publish, but it just outlines another possibility. As always, this analysis, as is all analysis, not just Elliott Wave, all technical and fundamental analysis, is an exercise in probability, not certainty. I can't tell you with absolute confidence what this market is going to do next, and for the last several months, of all the markets I analysed, oil has become the most difficult. This choppy overlapping movement is so difficult to analyse. From a bigger perspective, oil is essentially consolidating with support, resistance, support about 65. A downward swing probably underway, although now at the weekly chart level, within this consolidation there is a downward trend. From here, prices moving lower, ADX is now increasing, indicating a downward trend. It's not coming up from low levels below both DX lines yet though, so it's not a new trend. There was a strong signal from on-balance volume last week, and prices now moving lower. Volume is pushing price lower. RSI is still in neutral territory, a little bit to go before it gets oversold. We could see further downward movement for another maybe 2, 3 or 4 weeks even, if until RSI gets oversold and conditions get so extreme that a reaction would be expected. Money flow index also neutral, stochastics oversold. ATR flat as price is essentially moving sideways. That flat ATR tells me this is probably not a third wave. This is probably some kind of B wave or correction. At the daily chart level, there's now a longer term bullish divergence between price and money flow index, but there isn't really the same between price and RSI. ADX at the daily chart level also was indicating a downward trend. No signal from on-balance volume this week. No bullish candlestick reversal pattern. A close near lows for the week. A little bit of a bounce there, but not much. And so I'd expect probably more downward movement next week. Downward sessions toward the end of the week are stronger than upward sessions, so volume supports more downward movement or supports that view. On-balance volume is exhibiting some bullish divergence. Price is making lower lows on a closing basis, but on-balance volume is making higher lows. So there's a little bit of weakness in this downward movement. There's no bullish divergence, though, between price and RSI, but there is this longer-term divergence between price and money flow. Stochastics entering oversold, ATR overall declining and now flattening off as price moves lower, suggests with declining volatility this is not an impulse in the early stage of a third wave. That suggests this is more likely some part of either a first wave or a corrective structure. That's all from me with oil this week, with your video for oil. I hope everyone's looking forward to an awesome weekend.